Let's jump right into this explainer and unpack the incredible transformation story of Sumitomo Mitsui Financial Group, or as you probably know them, SMFG. If you follow global finance, you're well aware that the banking landscape can feel pretty rigid. But today, we're looking at a legacy institution that is literally rewriting its playbook. We're going to explore how SMFG is pivoting from a period of massive, present-day success into a really ambitious vision for the future.
To start us off, we just have to look at this absolutely staggering number, $10.02 billion, or 1.58 trillion Japanese yen. That is the record high net profit SMFG logged for the fiscal year ending March 2026. Hitting a number like that, well, it instantly demands the attention of the entire global financial world. I mean, this isn't just a slight beat on earnings. It represents a fundamental acceleration in their whole business model. So to understand exactly how they pulled this off, we'll quickly look at 5 key areas: their record-breaking year, their capital reallocation strategy, how they're rewarding shareholders, their new global vision, and finally, investing in the future.
Okay, let's move right into Section 1, a record-breaking year, and see how these massive numbers actually build on each other.
Now, what's really fascinating here is the consistent double-digit growth you're seeing across the board. If you look at the year-over-year column, we're talking about a 34% jump in ordinary profit up to 2.3 trillion yen and a 34.4% surge in that profit. Return on equity, or ROE, also took a massive leap, going from 8.0% to 10.4%. Honestly, this level of growth in a mature banking sector is just extraordinary. It was definitely driven by strong core businesses, but they also capitalized brilliantly on some favorable market tailwinds, specifically rising yen interest rates, which, as you'd expect, gave a massive boost to their margins.
But hey, we can't just credit the macro environment for this. This massive 34+% jump in profit isn't just some fluke of interest rates. It's deeply rooted in their foundational strength and brand trust as a leading banking institution in Japan. They've maintained absolute dominance in their home market, leveraging corporate activity and a really steady progression in household consumption and investment to keep this engine running hot.
But to keep growing at this pace globally, a bank obviously can't just stand still, which brings us to Section 2, their capital reallocation strategy.
The absolutely crucial point to understand here is a deliberate, highly strategic shift in their business portfolio. On one hand, you have traditional capital-heavy lending, right? The typical bread and butter of legacy banking. But SMFG is intentionally shifting its weight away from that, moving toward highly efficient, low capital-intensive areas. We're talking asset management and transaction banking. They're realizing that to boost profitability without locking up endless reserves of cash, they've got to prioritize services that generate high fees with much lower capital requirements.
Now, to actually pull this shift off, they're aggressively managing their RWA, or risk-weighted assets. For those who need a quick refresher, that's the capital a bank literally must keep locked away to prevent insolvency. By strategically reducing those low-return risk-weighted assets and selling off strategic equity holdings, SMFG is effectively unlocking the vault. They're freeing up massive amounts of capital that was previously just sitting there, allowing them to redeploy it straight into those high-growth, low-capital areas we just talked about. It's a real game-changer.
Of course, if you're an investor, you're probably asking, well, what's in it for me? And SMFG answers that clearly in Section 3, rewarding the shareholders.
They are allocating this newly unlocked capital in a very balanced way to make sure investors are heavily rewarded. They've issued a super robust dividend forecast of 180 yen per share for the fiscal year ending March 2027, and they're maintaining a solid 40% dividend payout ratio target. Add in their continued active share repurchases, and it's crystal clear that management is laser-focused on making sure shareholders directly feel the impact of this $10 billion year.
But while they're deadly serious about financial returns and capital efficiency, they also know exactly how to build brand love and have a little fun while doing it. Believe it or not, their corporate mascot, Mirosuke, recently took home the gold in the Nikkei Corporate Mascot Contest. No joke, it's just a really great reminder that rooted within this massive financial powerhouse is a highly recognizable, deeply beloved consumer brand in Japan.
So, with a fortified balance sheet and some very happy shareholders, we move right along to Section 4, their new global vision.
This upcoming 3-year medium-term management plan, starting in FY 2026, is driven by a new North Star. The quote reads, "Globally connected, rooted in Japan, your most trusted partner." And that perfectly encapsulates their dual ambition here. They refuse to give up even an inch of their dominance at home in Japan, but they are hungrily looking outward. They're aiming to capture major cross-border business opportunities and connect international investors directly with Japanese markets.
And this visually anchors their absolute boldest target yet: Just look at this trajectory. From a 6.5% ROE just a few years ago in FY23 up to today's 10.4%. But that third bar, that is the real game changer. They're aiming for a medium to long-term profitability target of approximately 15%. Now, this isn't just about beating local competitors anymore. Hitting a 15% target explicitly puts them in the ring to compete head-to-head with top-tier US and European financial institutions. It's a massive statement that they fully intend to be a dominant global player.
But, as we all know, wishing for 15% profitability and actually achieving it are two very different things. That brings us to our final section, Section 5, Investing in the Future.
SMFG knows they need an unmatched technology edge to hit that 15% mark, which is why they're committing this breathtaking figure, 1 trillion yen. That is a record-breaking allocation specifically earmarked for IT investments over the next 3 years. Because let's face it, you cannot compete globally on legacy systems, and SMFG is putting their money where their mouth is to ensure they're at the absolute cutting edge.
So how exactly do you spend 1 trillion yen on IT? Well, it's going to fund a massive multi-step digital transformation. Step 1 is a total ground-up modernization of their underlying IT infrastructure to boost speed and security. Step 2 is an accelerated migration to the cloud, giving them the agility they need to scale globally. And Step 3 is perhaps the most forward-looking, broadly integrating generative AI directly into their products and daily operations. This isn't just an IT upgrade, folks. It's a fundamental rewiring of how the bank operates to drive extreme efficiency.
So, as we wrap up this explainer, we really have to look at the big picture here. We've seen the $10 billion profit, we've analyzed the shift away from capital-heavy legacy models, and we've unpacked that massive 1 trillion yen bet on next-generation technology. So the provocative question we are left with is this. With a $10 billion profit and this bold, tech-forward roadmap, will SMFG successfully disrupt the Western financial giants over the next decade? They have the capital, they have the vision, and now they've got the strategy. It's going to be absolutely fascinating to watch them execute it. Thanks so much for joining me on this deep dive into SMFG's future.